Hello, and welcome to this update on the India Real Estate Opportunity Fund. My name is Dina Taslimi. I'm at Picard Angst, and I'm here with Ajay Siroi from Serena Invest. Thank
Hello.
you for being here.
Thank you for inviting, Dina. Good to see you again.
Yes. So let's start right away in the first question. There's still people who don't know the India Real Estate Fund. So can you explain it in a few words?
Yes, so India Real Estate Opportunity Fund is based out of Luxembourg. It's a regulated fund which was set up to benefit from the tremendous growth in India real estate market. The objective of the fund is to invest in high-end residential projects in prime locations of mainly Mumbai, then Bangalore and Pune. That's sort of the market. The goal is to exit by 2028 and return an IRR of 15% in dollar terms to the investors. So it started successfully in India. We already acquired the first project in Bandra, Mumbai, which is the prime location of Mumbai, where you have the film industry, you all have the film stars and the related industry people who live there with a relatively high income. So that's really very excited about the first project. It's going to be really one of the landmarks or iconic projects in Mumbai, which we will deliver in 2024. We have a very attractive pipeline now. Project pipeline is very big and attractive. It's all in the locations, prime locations in Mumbai, some in Bangalore and Pune.
Okay, you just said that the focus of your fund is also Mumbai and the high level sector and like a little bit of Bollywood.
Yeah.
Why is that? What was the reason behind this decision?
So as a Swiss fund, we don't want to compete in the medium and low income segments. We want to bring our Swissness, our value, our strength in the high income, high end segment where the people have, same expectations in Europe. They have a relatively high disposable income. These are executives of the top companies which live in Mumbai or rich family related people who are looking for a better residence. So that's where we add most value, and that's where we also make the most margin. And this is also the fastest growing segment today in residential market in Mumbai and Bangalore.
No,
So that's why
right.
we focus on this. Yeah,
Makes sense.
yeah,
And the reason why we're here today, right, it's because you're doing a second capital increase. So the fund was actually closed and you reopened it. Can you
yeah.
explain the reason behind this decision?
So we have a very attractive project pipeline, very interesting projects in Mumbai mainly and in Bangalore and Pune, which we would like to acquire. Our existing capital in the fund has been either deployed or fully committed, which means it'll be fully invested by the end of Q4 and Q1. That's why out in the market to benefit from this growth in India is seeing a tremendous growth in real estate market. Overall, the economy is growing. It's the fastest growing economy in the world today. And we believe it will continue to grow for the next 10 years. We like to benefit from it. Take the pipeline we have, we like to acquire those projects, realize them, develop them, sell those apartments, and exit from India. That's why we're looking for additional capital now. Our goal is to raise another 60 million. This 60 million would have been deployed, or we plan to deploy fully by Q1 and Q2 of next year. So we can focus on development and construction of the projects and then exit in the given time by 2028.
So you said you have a great pipeline and
Yes.
you've already acquired some projects,
Yes.
right? Yeah.
So
Maybe you can tell us about one that you just acquired recently.
so recently we acquired a project, as I mentioned earlier, in Bandra, in the prime location in Mumbai. These are 16 to 18 apartments for the ticket size of $2.5 million to $4 million price per apartment. Bollywood, again, high end segment. There are very few new apartments coming up. So it'll be one of the first projects with in that segment with that sort of quality. The handover is at 25. We have started the development work. We are in the design phase. The final design concept is more or less there. The approval process is relatively faster in India. We don't have Einsprach object recourse in India. It goes faster, and then we can go start the construction next year. And 25 is the plan, is the handover of the apartments. We have in the pipeline projects where we are very close in terms of acquiring the project, well advanced in negotiation with the client, with the sellers. Project on seafront, close to Juhu, which is another prime location. There's going to be very, very interesting seafront luxury apartments. So this is something we plan to acquire. Like I said, we're well advanced in talks. Our offers have been made. We are in the last details closing with the seller. We have potential projects on the Turner Road and the Carter Road. If somebody who knows something about Mumbai, these are the best locations in western suburbs of Mumbai. We can acquire these projects in next 3 to 6 months, and we'll the similar profile of the project we have acquired now, in 10, 20 to 30 apartments maximum. This is our sweet spot, so we can develop faster and exit faster, and also are able to sell these apartments within the price range that we're targeting.
I mean, we're going to have to ask about risks. What are you doing to de-risking these investments and avoid maybe also currency problems between the dollar and the rupee?
Correct. The various items, measures that we have put in place for de-risking the projects. One of them is that we don't invest any other segment than the premium segment in the prime locations. The location is very, very important in India, especially in Mumbai and Pune, where the markets are very, very professional and very, very transparent. And secondly, when we go into selling or construction of the building, we don't start the construction until we have sold at least 40% apartments, which is not a problem in India because the Indian market functions very similar to Swiss market in the condominiums. People start buying before you start the construction, and then you have the clients basically finance the construction. So the cash flows come from the clients, you finance the construction. So we're de-risking the financing of the construction, so generating cash flows from the clients. And then when it comes to project controlling risk, we have controllers also from Switzerland, which will go over there. And we have a team on site in India for a strong on-hand controlling risk management of the project inside. And then fourthly, we work with the local known construction company in Mumbai or in India as the top fives in terms of delivering the construction part of the project. And when it comes to cross-border risks, we've done two things. Is the biggest part of the capital in India will be invested as a debt, using a debt instrument, which allows us to reduce the tax exposures. And the second part is the currency risk. We're going to manage the currency risk by doing a US dollar rupee hedge. So there's no investment in India which will be done without a hedge. We do the lump sum hedge. So when the capital for the fund is committed, we hedge the full capital, which get transferred to India. So that's why we secure the rupee. So the various measures have been put in place to minimize the risk, manage the risk, and deliver our returns.
Thank you very much for this answer. Coming back maybe to the beginning and the end, you said it's going to end in 2028, the fund. So what's your exit strategy at the end?
Yeah, so exit strategy is very simple for us. We are a project company, so each project will go on an individual SPV. So there's one SPV, one company for one project. So as soon as the project is finished, apartment is sold, we liquidate the company, and then return the money to the holding company, and which will return the money to Luxembourg. At the end, if we are still left with some of the projects which are not fully completed in 28, we will sell the whole holding, because the holding is basically the parent company for all the SPVs in India. The holding company is in India. So there's a two-step strategy. One is to liquidate the SPVs of the project when the project is completed. The second option we have is to sell the full whole holding in India to another investor, another buyer, India based. Because don't forget, by 2028, we would have completed most of the projects, would have delivered the apartments. So we got a remaining collection of cash flows or remaining items in that SPVs. Or if it's not completed, we would have gotten all the approvals. So project can be also sold at a very relatively high value in the market.
All right. Thank you very much. That was actually also my last question.
Okay,
Thank
thank
you
you.
very much. Thank you, Ajay, for taking the time to join us and giving us this sneak peek into the India Real Estate Opportunity Fund. For anybody else that is interested right now, please go check out the fact sheet and the project fact sheet. And if you have any further questions, we are here. We're happy to have a one-on-one interview, Ajay as well. Please don't hesitate to ask any questions. Thank
Thank
you
you.
again, Ajay, for being here.
Thank you.